Wall Street notches modest gains on Monday with all three major indices closing July on a positive note. Investors eye important earnings from Amazon and Apple and the July jobs report. Stocks in the Asia-Pacific trade largely higher. The Bank of Japan raises its inflation forecast for this year. The GIFT Nifty suggests a muted start for the Indian market. Oil prices rally to a fresh 3-month high and record their steepest monthly gain since January 2022 amid tightening global supply and rising demand. Brent holds above $85 per barrel mark. The centre raises windfall tax on domestic crude oil production to 4,250 rupees per tonne starting today, while duty on diesel has been set at 1 rupee per litre. The levy on petrol and aviation turbine fuel continues to be nil. Maruti Suzuki reports a mixed bag in the first quarter as profits and revenue beat expectations but margins fall short. The auto major also terminates a contract manufacturing pact with Suzuki in Gujarat and is set to acquire Suzuki Motor Gujarat from its Japanese parent. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you on this Tuesday morning. It's the first day of August as well. So let's take a look at what the Asian markets are looking like. Largely higher, despite a muted start that we saw from the US markets at the handover, so to say. But for now, Hang Seng is continuing its gains it saw yesterday as well, 140 points higher there. Taiwanese index has come in for some profit taking. But apart from that, it is a green-looking screen for the Asian markets. Shanghai is in the red right now, but we have the likes of Kospi, Nikkei, Straits Times, all of them trading in the green anywhere between 0.2% to around 0.5%. If we look at the GIFT Nifty, that will come up for you on the screen, and that one is indicating that the start for our own markets will be in the green again. It's a 57-point uptick that the GIFT Nifty is suggesting as we speak. Like yesterday, let's see whether we are able to scale those levels or not. But let's talk about the US markets now. Wall Street ended yesterday's trading session higher. The Dow Jones added 100 points, while the S&P 500 and the Nasdaq closed marginally higher. Meanwhile, all major indices finished July on a positive note with gains of 3 to 4%. On that note, let's listen into some opinion coming in from Meera Pandit of JP Morgan Asset Management and John Stolfus of Oppenheimer Asset Management. Okay, all right, that is coming in from some US market experts now, but let's get you the final update on our global market wrap this morning. European markets ended the first trading session of the week mixed with the French CAC up 21 points, the German DAX about 23 points lower, and the British FTSE closing flat. To some important macro data that suggests a rebound in the Eurozone economy, inflation in the Eurozone dropped to 5.3% in July from 5.5% in June. Core inflation, which excludes food and energy prices, remained unchanged at 5.5% in the month gone by. GDP growth accelerated in the second quarter, expanding by 0.3% versus estimates of 0.2%. Okay, that's the global market action, but we do have a lot of cues for our own markets as well, and some impact of these overnight cues as well on Indian markets. We have our research team joining in to tell you just that, how the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come to you. What are you watching out for in terms of market cues today?
Well, good morning. Yesterday we actually saw, the kind of underperformance that we saw in the previous week get, reversed to a certain extent. Global market, are moving in tandem with how exactly our own markets are moving, given the fact that you're actually seeing broader markets across the globe outperforming the benchmark indices. Given that trend, the US markets yesterday managed to end with gains, but what was the starking outperformance was the fact that the small cap index Russell 2000 actually ended the month of July with significant gains of over 6%. When you're talking about crude oil prices, another important trigger that we are tracking at this point of time, fresh 3-month high, Brent futures up almost 1.2% overnight to $85.4 a barrel, and WTI futures up to over $81.8 a barrel. Now, coming to the Indian markets, like we mentioned yesterday, it was a range-bound session. However, we ended with gains. It was an outperformance as far as the broader end of the markets were concerned, with the mid-cap index actually hitting a fresh high. And this is a lifetime high that we are talking about. Market breadth were in favor of the advances in the 2:1 ratio. And when you're talking about some of the important cues to watch out for, remember, we are ending the lag end as far as the earnings season are concerned. Some important results today in terms of Escorts, Kubota, PVR Inox, as well as Thermax. Asian markets, have taken a positive cue, trading largely in the green. And, even the GIFT Nifty is indicating a gap of start for our own markets.
Okay, all right. Thank you so much for that, Vivek. But a lot of stocks that will be on our radar as well. Surbhi has that list. Surbhi?
Thanks so much for that. So a few earnings on my radar. The first one is Maruti Suzuki. The revenues were up 22% on a year-on-year basis, but the margins were below expectations, came in at 9.2%. Additionally, the board has approved the termination of contract manufacturing agreement with Suzuki Motor Gujarat. The company is going to acquire Suzuki Motor's 100% stake in Suzuki Motor Gujarat. Power Grid, the revenues were flat on a year-on-year basis, but the margins have come in at 87.2%. Petronet, it was a good set of numbers. The margins were a beat. The revenue was down 16%. The operating margins came in at 10.1% versus a poll of 8.7%. IRB Infra, it was a weak set. The revenues were down 15%. Margins have come in at 47.6% versus 55.1% same time last year. Bosch, the revenues were up 17%, but the margins have come in at 11.3% versus nearly 13% same time last year. And apart from that, ONGC will also be on our radar because the windfall tax on crude oil has increased to 42.50 per ton from 1600 per ton.
Okay, that is a long list. A lot of stocks that will be on our radar. But finally, let me go across to Mangalam joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So, after the indices bounced back from the 20-day moving average on Friday, the gains continued yesterday as well. Opened flat, saw a bit of a dip, and from there we saw a big move on both the indices, the Nifty as well as the Nifty Bank, which was an underperformer but rallied in the second half of trade to end at the high point. The mid-cap index was a staunch outperformer. However, a couple of trends we need to monitor. The FIs have been selling for 3 consecutive sessions in the cash market. However, the quantum of selling has reduced, so that's something we'll have to watch out for. Now our markets are being supported by the DIIs, the domestic institutional investors buying 2,500 crores in yesterday's trading session. But over the last 3 trading sessions, what's also happened is that the Nifty futures premium has come down from 150 points to 105 points and yesterday to around 90 points, telling you that the FIs are selling in index futures. They sold almost 730 crores in index futures yesterday, unbound about 1,000 long contracts, added 7,100 short contracts as well. As a result of which, the long exposure stands at 51%, so it's at an even keel as against 59% at the start of the series. And we have a selling of nearly 10,000 crores coming in index options as well. What is it that the FII sold yesterday? They sold twice the number of puts that they sold calls, and that's telling you support has moved higher. This after the market recovered from important levels and ended at the high point of trade yesterday itself. So where were the put writers active? 19,700 and 19,650. We saw the call writers at 19,750 being caught on the wrong side, so some positions being covered out there as well. What does this imply? That the option writers are looking at supports between 19,600 to 19,650. The support has moved higher and resistance is above 19,800. That's also the level where the GIFT Nifty is indicating an opening, so that's something we'll have to watch out for. The second half of trade will belong to the Nifty Financial Services. The expiry today, 20,500 call and 20,200 puts, extremely active. In terms of stocks, yesterday's big loser was Piramal Enterprises, has now entered the F&O ban, so I'll watch out for that.
Okay, all right. Thank you, Mangalam, Surbhi and Vivek for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, we'll focus on some important earnings and get you the fine print on Maruti's first quarter performance as well. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. As promised, let's focus on some important earnings now. Maruti Suzuki reported a mixed set in the first quarter. Sonia is joining us with the analysis. Sonia?
Well, thanks a lot for that. As you rightly pointed out, the numbers of Maruti were largely, a mixed bag. Now, the pressure really came into the margin performance this time around. The margins were below what the street was estimating. In fact, if you look at it, there was a big sequential drop in their margins as well. Now, just to put it into perspective, it's a 130 basis points quarter-on-quarter fall in margins at 9.2%. And the poll was about 10.3%. So in that context, there was pressure. It was hit by higher employee costs, which went up 110 basis points quarter-on-quarter, coming in at 4.7% of sales versus 3.6% of sales quarter-on-quarter. The company also mentioned that higher sales promotion expenses is something that have impacted the margins and that perhaps could impact margins going forward as well. Apart from that, the revenue numbers were not too bad. It was a 22% growth that we saw on the top line. The core EBITDA went up 56% year on year, and the profits came in at 2485 crores versus 1012 crores. But the board has approved the termination of the contract manufacturing agreement with Suzuki Motor Gujarat, and the board will now be acquiring SMG, which is Suzuki Motor Gujarat. The 100% stake will be acquired from Suzuki Motors itself. The acquisition will be done before the 31st of March. Now, we spoke to the company, they of course we will hear from them in greater detail, but they mentioned that it made sense if one management only controls everything from production of the car as well as the technology, and hence they went ahead with this acquisition. They also said that the shareholders should be reassured that this acquisition of SMG will improve the efficiencies of Maruti. Apart from that, the other highlights were the company has achieved a market share of 20% in the SUV segment, supported by a strong product lineup. So all in all, you'd have to say the street could react negatively to the margin disappointment, and I expect the stock to be in the red. In fact, perhaps we will be speaking to RC Bhargav as well. Back to you.
Okay, all right. Thank you so much for that, Sonia. But of course, we'll be tuned in to CNBC TV18 at 8:30 a.m. for that conversation. Okay, let's move on to another important voice from the corporate world. Nestle India's chairman and managing director, Suresh Narayanan, is bullish on growth even as he says food inflation remains a concern. In an interview with CNBC TV18's Shireen Bhan, the Nestle India chief said they expect volumes to grow 7 to 8% if inflation remains at moderate levels. Listen into excerpts from that conversation.
21 quarters have been double-digit growth. In that, almost 15 out of the 26 quarters have been quarters of double-digit profit growth. The return on equity of the company is close to 100%. The innovation rate has been clicking at over 5% of sales. 7-year track record of the company shows an organic growth of close to 11% and an underlying volume growth of 7%, 7 to 8%. A strong trend towards premiumization of brands. So consumers are trending up in terms of certain categories, brands, and certain preferences.
Okay, that's the word coming in from Nestle India, but it's time again to slip into a break. When we come back, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're watching Power Breakfast here on CNBC TV 18. Well, we spoke about the equity markets and a lot more. It's time to talk about commodities. Let's get in. Manisha Gupta is joining us with all the update from the commodity space. Hey, Manisha, good morning.
Hi, morning, and thank you for that. Well, I'll start with the crude oil prices, which are trading at a 3-month high. $85 a barrel is on your screens. This is we've seen 5 weekly gains come in for the crude oil prices, and the month of July, where the crude prices gained up by 16%, has been the best month in 18 months for the crude oil prices. Well, the Saudi Arab extending cuts for the month of August and September clearly has been supportive. Support also coming in from the fact that Goldman Sachs for 2023 has increased their global demand forecast. Also, there are unplanned outages at BP Canada Whiting Refinery that has been supportive, and the markets will watch out for the OPEC and allies meeting, which is this Friday itself. The strength also has come back in case of metal prices. It really started with iron ore, and then we've seen it spill it over to steel, and now copper is trading at a 3-month high. Even as the Chinese manufacturing has shrunk to a 4-month, for the 4-month in the month of July, there are even more expectations of more stimulus measures in China, and that is keeping the metal sector supportive. So while we've seen copper prices gain up by nearly 2.5% for the month of July, the expectations are that you could be looking at further build-up in these prices for the month of August and September. This is also the period that you see the peak construction demand season continue in case of Asia, and that could lead prices higher.
Okay, all right. That's the update from the commodity space. Thank you so much, Manisha, for joining in. Staying with commodities, let's listen to Jeffrey Curry of Goldman Sachs as he lays out the factors that have led to the recent rally in crude prices.
The big shift was China.
Okay, all right. That's all about crude oil prices at $85 a barrel. So that's been a big uptick that we've seen in the last couple of days as well. Quickly taking a look at what the Asian markets are doing. They're largely higher, and that is something that continues to be the case yet again, except for Taiwan. Of course, it has recovered a lot of its losses from the lows as well. So absolutely flat, but with some negative bias. We have Hang Seng, which is continuing its gains. In fact, it has extended those gains as well, 1.2% higher there. And the others as well, the likes of Kospi, Nikkei, Straits Times, all of them are trading in the green as we speak. GIFT Nifty, that should come up for you on the screen, and that one is indicating that the start for our own markets could be in the green, 56 points higher there at that 19,893 mark on the GIFT Nifty as we speak. We'll do one thing, take your leave on this edition of Power Breakfast, but stay tuned. Bazaar Morning Call comes up next with all the action.